So today I'm going to be reacting to Tom Camp, who claims to be a trading coach slash educator. He does one-on-one mentorship. You guys know how I feel about that. So please tag me in any videos you'd like me to react to, and let's go.
Did you know that price is fractal? What that basically means is that every single candle you see on a chart behaves the same.
Okay, this is actually a very good point that Tom makes. If anyone ever claims that they all behave the same, ignore everything they say afterwards because that's just an outright lie. The market is random.
Every single candle has an open, a close, a high, and a low. And the only thing that differentiates every single candle is time.
Nothing he just described is behavior. He just described descriptors that can apply to every single candle in existence. It's going to have a high, open, a low, a close, an average, a medium. Doesn't describe behavior at all.
Every single candle you see is the same with the open, close, high, and low.
Every single number you see, it's the same. It has symbols.
So basically, my next anticipation would be for price action to come somewhere inside this retracement leg in order for me to trade price higher.
I love how he just gives zero explanation why price has to hit that level. Like, there's no reason that he gives.
But because price is fractal, this is one time frame, which means on a smaller time frame, you can actually see price action in an upward trend doing something like this. And then when price action is retracing lower, on a smaller time frame, it will look like a bearish trend.
He's just drawing lines on paper. He is literally just drawing lines on paper. What he's describing is what he drew. This doesn't tell you anything.
So if I'm utilizing this area as a key level of interest for me to look for price to go higher, then on a smaller time frame, I will be waiting and looking at price action trending lower, which means when price comes into my area, I am expecting price action to basically shift in market structure to the upside, breaking this structure.
Please notice, guys, I'm going to keep repeating this point over and over again. He is explaining what happens. He is not saying why. And the reason he is doing it is because he doesn't know why. He just makes it seem like he does.
And my trade would be on the retest of this level to eventually take price to the upside.
No rule states that that has to happen. It could go to the downside. It could go sideways. They could literally go around in circles. No rule that it says it has to do that. Again, describing but not explaining.
Which in turn would mean I'm in direction with the trend overall.
No time frame, no explanation given why that's the trend, literally nothing. It's the trend. I'm in line with the trend. Believe me because I said so.
And that is how I'm determining market structure, by understanding that price action is fractal.
I'm not really sure what fractal means anymore. What he described was that you could apply descriptors to all candles, and that's kind of it. And he drew some lines.
Because everything that happens on a daily chart can happen on an hourly chart.
No, actually, this is just completely wrong. The hourly time frame doesn't actually move quite as much as the daily one, because the daily one captures market drift much more than the hourly one. The daily one is actually correlated more so to the upside because the market tends to go up over time. The hourly is not as strongly correlated. Therefore, no, everything that can happen with the hourly doesn't necessarily mean that can happen with the daily, because the daily is capturing more market drift over time versus hourly, which doesn't. Hourly is much more random. One is much less random because it's more correlated with time, and the longer you wait in the market, the more money you make.
So go and backtest this and let me know how you get on in the comments.
And as a recap, he says that, oh, just go and backtest it. But if you follow on what he's saying, you actually can't backtest anything he's saying because he didn't describe anything to backtest. He never gives any numbers. Not really impressed with this guy, especially he's claiming to educate people, and he just describes, but he doesn't actually explain reasonings behind those behaviors. He says it's this way, but he can't explain to you why it's that way. And the explanations that he does try to give, if you actually analyze them, they can be applied to all candles. He gives descriptors of candles, and he says, oh, because, a candle has this price point, and this price point, you can describe it in these ways, therefore it behaves in this way. That's not really true. It's like sitting here and saying all humans are made of atoms, therefore all humans behave the same, which again is not true. Not everyone behaves the same. And a big mistake that I think people are going to make is they're going to see this graphic, they're going to see this stuff, and they're going to think that this is reliable, when if you really analyze it, it's very weak. Bit of a longer video than usual, but let me know if you enjoyed this, guys. I want to do a bit of a deeper dive in this one and kind of just break down everything. I think a common theme is going to be people describing without explaining, and this is just a prime example.